the smartest thing for us to do was just rent and then use all the money we would have put into a down payment on a bigger home into buying up rental properties until we had enough, that I could leave my job. And then we bought the house.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I am so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit the subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Anna Kelley. Anna is the president at Greater Purpose Capital and REIMom LLC. She is a former top-ranked financial relationship manager for a private bank and worked for AIG for 20 years in the high net worth and affluent markets group, focused on creating hedge fund-wrapped insurance investments for ultra-high net worth individuals, banks, and institutions. In addition, over the past 20 years, Anna has purchased, renovated, and rented millions of dollars in real estate across numerous asset classes while working full-time and raising 4 active children. She is also a 4 times Amazon #1 best-selling author of The Only Woman in the Room, Resilience, Turning Your Setback into a Comeback, Success Habits of Superachievers, and Bringing Value, Solving Problems, and Leaving a Legacy. She has been featured in 3 other real estate books, including Profit Like the Pros by Ken Corsini. Anna, we are so excited to have you on the show. Welcome. And before we get started, give us a quick 2-minute rundown of who you are, what your background is, and where you currently are in your journey to achieving time freedom.
Great. Thank you so much for having me. So as you mentioned, I started out in the corporate world, and I was really in the retail institutional investment world for a very long time, telling high net worth individuals what to do with their money. But I was not a high net worth individual, and I didn't want to wait till I was 65 to achieve that financial freedom and that time freedom. I had a baby in 2003, and that set me on really the trajectory of my why and my purpose. I was wanting to get home with that baby. It took me years and years after the financial crisis, but I started investing in real estate on the side to take my finances under control, my time under control. I retired from AIG, developed a very high net worth, and was able to replace my income. And I retired from AIG about 4 years ago. Now I'm full-time real estate, run a mastermind and a coaching program to give back, and run, operate, and develop large apartment buildings.
That is amazing and such an incredible achievement that you've done over these past years, and I commend you for that. And so let's take a step back and rewind just a little bit before you even got started in AIG and all of these W-2 positions that you held before retiring, right? What kind of made you choose to jump into the financial services industry before you even got started? Is there anything of interest?
Well, it was kind of an accident, to be honest with you. Just one of those chance meetings that you're thankful for looking back. But I grew up in Section 8 housing, and so I really didn't know anything about money, budgeting or anything like that. And I went to school full time, worked full time at the same time, very driven, wanted to achieve a lifestyle that I didn't grow up with, and thought the corporate world was that path. And after I graduated, my roommate actually got a job with Bank of America, and she recommended me for their new private banking department. She said, "You've got to meet Anna. She's a go-getter." And they were bringing in new private bankers to train us to get our securities licenses and work with their top 10% of wealth in the bank. And so I said yes to the interview. I was underqualified. I didn't have my master's degree or any of my securities licenses, but they hired me and trained me. And that's really what got me, my eyes open to what was possible.
That's amazing. And so you jumped at this opportunity to be able to work with these high net worth individuals. What was that experience like? Was there any specific realization that stuck out to you during this time?
Yes, there were a couple of things. One of the things was this was back in the late 90s. And so I remember a conversation with one of my clients. He was at my desk in Houston, Texas, and we offered him a really high CD rate at the time, CD or an annuity. It was like 8 or 9%. And he laughed at me. Now, granted, I was in my young 20s telling, gentlemen in their 60s, 70s, 80s what to do with their money. And, he came in and he was interested in our products, but he laughed and he said, honey, I make way more than that in my real estate investments. And this light bulb went off and I said, wait a second, I've been trained on all these other, retail investments, but I have not learned a single thing about real estate. And so wealthy people invest in real estate. I should probably learn something about that. And around the same time, I had some friends who were a little bit older than I was, and they were starting to buy their first property. And I realized I am throwing so much money away in rent. I should buy a condo. And if I buy the condo, at least I own something and later I'll have real estate and I can rent it out. And so that was really the one thing that sticks out to me as I learned wealthy people have options. There's lots of different things we can do to grow money. But real estate was something I wanted to learn more about. And the other aha moment during that whole period, was really that the traditional investment route tells you to save money, 10% or so, put it in your 401k, get your match. One day when you're 65, you'll have $1 million you can retire on, live on 4%, which was $40,000 a year. And even then I thought $40,000 a year doesn't sound like very much money when I made more than that even in 1998. And I thought, I don't want to wait till I'm 65. There's got to be a better way to grow the wealth. Now I just got to figure out what that is.
I love that. And that sounds like really valuable insights that you got at such an early age. And they, they have that saying, 90% of all millionaires have achieved so by real estate investing. And so that kind of is a testament to what potentially works better than some other traditional asset classes that other people have been educated to invest in, right?
Absolutely.
And so moving on forward from this, you decided that, hey, I'm paying way too much in rent. I think maybe in purchasing my first condo might be the first option to help me jumpstart my real estate investing career. How did you position yourself to go ahead and do that? And what was that experience like at the time?
Sure. I really didn't think a whole lot about it, but I knew it was really important to have very good credit, to pay your bills on time, to not max out your credit cards. We learned that basic money management stuff. And so I thought, how hard can it be? I work for the bank. And, I've got good credit, I have a good income. And so I just applied for the mortgage, with someone in my branch and said, hey, I want to buy this property. And it was pretty easy to do. Now, I wish I could say I had the, foresight to say, this is the way that I'm going to grow wealth. I really didn't. I just knew that owning an asset and not throwing money away in rent was a smart thing to do. And that one day it might give me a little extra rental income.
Love that. And so you ended up purchasing that first condo. Did you eventually end up renting that one out, or what did that trajectory kind of look like from there?
I wish I could say that I did, but I got married. And, we had this mindset of, okay, we're going to get married. We're going to get the house. We're going to pay off the school loan. We're going to have a baby. And so we sold that condo. I should have kept it, but we sold it. And then I made money on it. I made a profit. So I was like, wow, I made a pretty good profit in just a couple of years. Let's do this now with a house. And so we bought a house in an up and coming area, knowing that everything around it was just skyrocketing in value. So we bought in a, rougher neighborhood compared to what we could have, with the potential of upside in the real estate. So I was thinking about value and upside and all of those things, but I didn't keep that initial condo.
Gotcha. And throughout this time, you're obviously still working at your W-2. You worked at AIG for 20 years, and you purchased that single family home. At what point did you decide to make the transition into active real estate investing? All while raising 4 children? Like, I guess, at what point in your life did you decide that this was the option to go to?
At that point, I had left Bank of America. I was working for AIG, and I was very much focused on just moving up the corporate ladder at AIG and product development, and loved what I did working with, products for ultra high net worth individuals. And that was kind of my path. The real estate was just something that I was going to invest in alongside with my 401k. And in 2003, I had my first child. And as a mom, when you hold your first baby, there's nothing you want more than to be home with that kid. It doesn't matter how driven you are, how successful you are, how much worth, value you want. I just wanted to be home. And at that time, my husband was just out of chiropractic college for a couple of years. He had 6-figure school loans, not unlike many people today. And he made about a third of what I made. And so we had the school loan that was as much as a mortgage payment and a mortgage payment and a car payment and a new baby. And he could stay home, but I couldn't. And I knew that's not the path that I wanted. So at that time, I was on bed rest for a couple of months, actually, and I watched a lot of Flip This House kind of shows on HGTV. They had just started coming out, and they made it look really easy. And I thought, how hard can this be? I could flip a house or two and replace my 6-figure income. That's what it made it sound like. So we decided in 2003, let's flip houses and see how that goes. And we started with a 3-month-old baby and flipped our first house that also had a cottage apartment. So we had rental income coming in for that flip. And that made me realize what was possible. We did lose money on that first deal. And my husband said, we are never doing that again. So I thought, okay, well, flipping didn't work. I've got to figure out a way to get home with this baby. And so we sold everything. We paid off my husband's school loans. We moved to central Pennsylvania from Texas for him to start his chiropractic business in 2007. It was the height of the economy. And we thought, things are just going to get better. And within a year, I could leave AIG and be home with my now 2 babies at that point. And little did we know that 2008 would happen a year later and all of that would change. But the smartest thing that we did is I realized that I followed Dave Ramsey at the time, and I knew, we've got to live below our means if we ever want to be able to get ahead. And so I knew my job was going to be a short-term thing, or at least that's what I thought at the time. And I knew that we needed to live below our means. So we sold everything, paid off the debt, moved in with my in-laws with 2 babies for a year while we built my husband's practice. But we bought a building that had a practice on the bottom and it had apartments above it and behind it. And so I thought, hey, instead of leasing space, let's buy the building. We'll have some rental income coming in, which I knew, again, was a smart thing long term. And it would help us to live below our means. And we could always live in one of the apartments above it if things didn't go well with his business startup. So we bought that property in 2007. And that was the first time I realized, it's really nice to have this extra rental income. It's going to help me to get ahead, not to build great wealth, but just to replace my income with my husband's business. And then when '08, happened, his business started to struggle. After that first year, I was almost laid off. Weekly, I was told to look for another job. My 401k was just about wiped out through 2008. And the only thing that was going really well was people were still paying rent. And I bought a 4-unit building and house hacked it, lived in it. So again, we lived way below our means. We had that rental income just to sustain us and help us to be okay so that I could be home with my kids. But after '08, I realized this is really the only thing that's still doing well, not the stocks, not my 401k, not my company, not my husband's entrepreneurial, adventure. So we're going to find and buy as much real estate as we possibly can and take control of our finances at that point.
That is amazing. And kudos to you for having that realization. I just interviewed Randy Smith last week, and we were also talking about a very similar thing, and that you want to first start by getting yourself in a position of financial strength, right? Get your personal house in order. And this is something that I've noticed is very consistent with a lot of these people who have achieved that level of success that they have, is oftentimes the humble beginnings comes with making sure that you take inventory of what your expenses are, taking inventory of what you're bringing in, and making sure that you are not constantly paying out on a month-to-month basis so you can't get ahead, right? And so, as you said, you sold all of your liabilities, most of these things, and you ended up living at your in-laws, you said, for about a year before renting out an apartment. And so then, once you house hacked, you eliminated your largest expense, which is your housing, right?
Yes.
That's amazing.
And my tenants at the practice were paying most of the cost of the mortgage for my husband's practice that was a startup. And we knew that startups, 95% of them fail in the first couple of years. So we knew that, and we knew that was a possibility. So we said, hey, at least we'll have rental income, and there will be no cost to the building. And then we bought the 4-unit to live in, and, lived in a little 2-bedroom apartment for another couple of years. So we spent 3.5 years really living below our means to try to be okay. And then we started to think about, okay, now how do we take what little we had left in our 401k, right? And buy another building. And then we rented a house. So a lot of people are surprised. I rented another house for 3.5 years while we bought up a bunch of rental properties, because I knew I didn't need to buy that house. It was going to set me back, my desire to be home with my kids. And so the smartest thing for us to do was just rent, and then use all the money we would have put into a down payment on a bigger home into buying up rental properties until we had enough, that I could leave my job. And then we bought the house.
That's a really good insight, because, a lot of people don't consider that when you purchase something that you're living in and you're responsible for all of the maintenance, all of the repairs, you're paying down the mortgage, but ultimately this is a big liability because it's not putting cash in your pocket.
Exactly.
There was this saying that someone had mentioned, it's like rent where you live and live where you rent, right? And it sounds exactly what you did.
Yeah.
And so moving forward from there, you purchased your first floor plat, and then you ended up scaling your portfolio. What did you do to kind of position yourself? Were you putting yourself in a position where you can put 20% down payments on each of these subsequent properties, or what did you end up doing to scale?
Yes. I was doing it at a really difficult time. In the end of 2008 and early 2009, I was really a liability to banks. I worked for AIG. They were in the news literally almost every day about how they were going under, layoffs, etc. My husband had a new startup business that was starting to struggle. And we had about $700,000 in debt. And that was business startup debt and the building that we had bought. So part of that was an asset, right? But let's just say a negative $200,000 net worth. Well, nobody was lending to business startups or to real estate investors in 2009 and 2010. Real estate was crashing. It was too risky. And so I had this plan. I read one book called Multifamily Millions and saw that if you buy multifamily and renovate them, you can force the appreciation, force the values up, increase your rent, and then keep trading up. And so I thought, that's what I'm going to do. And so I saw all these 4-unit apartment buildings in my area for sale, and nobody was buying them because no one could get financing. Very similar to what we're starting to see today. And I took what little I had left. I did what every advisor tells you not to do. I took what little I had left in my 401k, and I bought another 4-unit. I put that as a down payment on another 4-unit. The financing fell through the day of closing because whoever had to do the final sign off did not like that I worked for AIG. And so they pulled the loan. So I really realized, I may not be able to get loans. I found a small bank that did it. But from there, at first, I kind of gave up, to be honest with you. I thought, no banks are going to lend to me. We had no money to put 20% more down. Only that little I had left in the 401k. I had 50,000. I had lost about 3/4 of it in the market fall. And so I had to start getting creative. I really want to be home with my kids. I'm going to have to do whatever it takes to figure this thing out. And I started studying creative financing. And then I started making offers to retiring landlords that wanted to sell. They wanted to get out of real estate. They wanted an income. And I did 3 seller finance for, apartment buildings within a couple of months. And when I did that, I realized I don't need banks. I can do it this way. And once I started, buying seller finance, 4-unit apartment buildings, raising the values, raising the rents, I finally found a small local bank that was willing to give me equity second mortgages on those, or to pay off, the seller. And then I was able to take that equity and use that as down payments on the next one and the next one and the next one until banks started lending again.
I love that. And it also goes down to, what is your why, right? And this is a question that we always ask people, near the end of today's show. But it sounds like you had such a strong desire, because you had children at home that you wanted to be with, that you needed to make a solution to solving the problem that you were encountering with the banks. And so
100%.
you got in your position where you were able to first negotiate seller financing for a couple of properties. And then once you were able to build up enough equity, that's where your down payments would eventually come from for future deals. Is that what I'm hearing?
Absolutely. Because even though I had a really high income, I was really afraid I was going to lose my job any day. My only kind of saving grace was I knew I'd get a pretty good severance package. So I kept thinking, well, when I'm laid off, I'll have enough to live on for a year, right? But my husband had a very small business in a very small town. He was one of 7 chiropractors in a town of 7,000 people. So there's not a lot of market share for us to go after. And his business was struggling. And so a lot of my salary went to actually float his business and continue to pay for the business debt. So not only did I need to replace my income, he didn't have any net income coming in and he had salaries to pay. And so my income was mostly going to pay for the practice. So I didn't have any extra to go buy property. I had to say, I've got to create this value out of thin air. And I knew real estate was a way for me to buy properties that were ugly, that nobody else wanted, and to have the vision to be able to turn them into something worth a lot more and to just continue to do that BRRRR method of taking the equity and using that. So it was one at a time and it took years to do it, right? People think you see an overnight success and you think that this just happened very quickly. And for me, from 2008 until I retired from AIG in 2018, maybe it was 2018 or 2019, retired from AIG. It took me a decade really to build up enough passive income from those rental properties to replace the 6 figures, to pay off my husband's debt, and to build that, multi-million-dollar net worth that allowed me to retire. It's only since I retired that I really exponentially, because I had time freedom now, right? When I left AIG, all 4 of my kids were in school. So I was able to say, okay, now I can work during the day. What do I want to do now? What's my new why now that my kids are in school? And I was then able to really exponentially grow, to a $250 million plus rental portfolio.
Fascinating. And, obviously when you're going through this at the time, it doesn't seem all extravagant and as everything that people make it out to be, right? As you're saying, it took you 10 years to get to the point where you were today. And so throughout that time, did you just continue sticking with 4 flats? What did you do to continue scaling your portfolio? Did you end up going bigger? And if so, how did you do that?
Sure. Until the point that I was getting ready to retire, it was almost all 4-unit apartment buildings. And the reason for that is because I lived in a small town area in central Pennsylvania where there weren't a lot of bigger apartment buildings. It was mostly 4plexes. That's just kind of what was here. And those were the properties that were, too big for people that just could do flips or a single family house, but they were too small for those that really had, more money that were investing in other things. And so I always look at what's your financial goal, right? This is kind of putting on my former Bank of America hat. What's your financial goal and where are the best opportunities to meet that financial goal? And for me, the best opportunities were 4-unit buildings because there was lots of them and there weren't a lot of other investors and competition going after them. So I built my portfolio in that 10-year period. We bought 70 units. And so we had 70 units before I decided, okay, I'm going to leave AIG. This is pretty secure. They're all renovated and pretty turnkey at that point. And at that point that I decided, okay, I've got enough that I can retire. This was in mid 2018, actually. And I thought, I'm a little bit nervous about the economy. I started to see some signs that we might be heading into a recession at the end of 2018. And we actually did hit a manufacturing recession in 2019 when I was retiring. And I thought, before I do this, because I don't want to end up with a, 2008, 2009 scenario again, I want to start doing some bigger apartment buildings. And I found a 73-unit apartment building in Hershey, Pennsylvania. And I knew that if I managed 70, I could handle a 73 unit. It was just one location instead of a bunch, right? And so I found this building, negotiated it off market before it was listed. And I found 2 partners and we took down that property. And once I had that one under my belt, I thought, when I retire and I give my notice, I'm going to go after bigger apartment buildings. And so I did my first larger, the 73-unit joint venture in December of 2018. And then I left my job in May of 2019.
Wow. And this is obviously a huge jump coming from acquiring 4 flats. Yes, you had a portfolio of 70 units, but purchasing one single transaction of 73 units in under one roof is definitely a little bit of a different mindset shift that you had to encounter from there, right? But I guess
It
how
really
did you do
wasn't
that?
much of
Yeah.
a change. The biggest thing was I thought this is going to be easier than what I've done already. It's one property that took me 10 years to, build up the same number. My biggest challenge was just how do I come up with a couple $1 million down payment because I didn't have it, right? So it was, can I raise this much money quickly enough to take down this property? But when you have a big why and you really want something and you really desire it, you become resourceful. More than anything, I had grit and I had determination and I'm going to try or I'm not going to get what I want. So, thankfully, because I worked for Bank of America for years, even in the mid 90s, we had to bring in $3 million a quarter just to keep our job, right? So I was used to talking to high net worth individuals about investments and why a certain investment was good or bad for their financial goals. So I thought, I'm used to talking to people. Now I just have to find my own network of high net worth investors to help take down the deal. So it really wasn't daunting to me in any way. It was like, this is the next thing. And then once I did the first one, I was actually going to syndicate it. But I had an investor that said, I really like this deal and I want to be your only investor. And so I was able to do it as a joint venture. And that gave me the confidence to say, we can do more. And then, we've now bought close to 240 units together as joint ventures. And then, when I made money on those, I went and bought more small properties for my own family, 10 unit properties, 20 unit properties, etc. And then I started syndicating after I had done several larger joint ventures.
I love that. And, on that note of grit and determination, I do want to take a step back and let people kind of have an understanding here of what you were really doing. So you were the primary breadwinner in the family, right? You were helping support your husband's business. You guys were working towards eliminating all of your liabilities throughout this time. And you were scaling your portfolio and managing the rehabs and managing the tenants.
Yes.
So while having 4 kids.
Yes.
Right. And so how did you kind of structure your time and organize your life in a way that you were able to achieve all of these things while they were going on?
I look back and I say, I don't know how I did it, really. I worked 70 to 80 hours a week for a decade. This was not easy, get rich quick for me, partly because of the timing of when I got really, started to really try to scale up after 2008. And so it was not easy. It was hard and it was a long game. And I basically, I also ran my husband's business other than seeing patients because he, when you go to medical school of any sort, you're taught how to be a doctor. You're not taught marketing, billing, hiring, HR, any of that stuff. So I was running his business every lunch break, every day after work while my mother-in-law watched my kids. Then we'd pick up the kids and then we'd eat and then we would deal with apartments. We painted, we learned to replace windows. We did all the hard work ourselves. We had to learn how to do it. And so, we had all kinds of tenant problems, had to learn to become landlords. And so essentially all day, every day, other than on Sundays, we were working sun up to sundown. And our kids just learned to live with us at apartments and floors and lows. And it was really grit determination that come hell or high water, I don't care how long it takes, I'm going to get out of this and I'm going to be home with my kids. And at that point, I really wasn't thinking about creating great wealth. I was totally focused on income and cash flow. And I knew that was my goal. But I needed to buy properties that had some upside in order to be able to continue to have down payments to buy more and more and more. So it was a long, hard process, but I just maximized every minute of time. I didn't have downtime. We didn't have cable. I didn't watch TV. I didn't listen to podcasts. This was before that, this new era of podcasting. I just said, I am going to buy the next building and the next building and the next building. And we're just going to keep going until I have enough cash flow to comfortably, confidently leave, even thinking we were heading into some the bottom of another economic cycle.
Wow. And here's the thing too, is you were going through this and it wasn't just you who were as a real estate investor, your entire family had to be on
Yes.
board with being real estate investors, right? So when it came to having these conversations, I mean, obviously it's not all sunshine and rainbows throughout this entire time over the period of 10 years. So when you guys were hitting those lows throughout that journey, I guess, what driving force kind of helped make sure that everybody stuck together and saw the long-term game for what it was?
Yeah, honestly, I'd say the grace of God, truly, because it was hard. My husband and I were exhausted, not just like exhausted for a week or for 3 months during a rehab, but exhausted all the time. It was like 10 years of rehabbing properties, right? So when you don't have money, you have to make up with it with time. You have to invest time. And so we knew this is not going to last forever. We're getting closer. We just have to keep going. One more day, one more day. But we fought, right? We worked together in his business. We worked together in our real estate. We were trying to raise 4 kids. It was really hard. And I think if we weren't committed to God and each other, that no matter what happened, no matter if we lost everything again, it would have been really hard to stay together and to continue to do it because it was not easy. It was really tough. But again, I grew up in apartments. I grew up in Section 8 housing. I've been in women's shelters, right? My mom was a battered woman, and I was committed that no matter what happened, I would never go back there. I'd be able to take care of myself and take care of my kids, and I would do it no matter what it takes. And so, just that determination to be able to, provide my kids with a better life, and really to be able to be financially okay and no longer dependent on a company or my stock portfolio or a business, but that I would, take control of my finances and have cash that would continue to come in and day out. And it paid off, right? It seemed like it took forever. 10 years is a long time working 70, 80 hours a week. But when I look back and I say, wow, I was able to retire a high net worth individual in 10 years of really hard work. Now we really have that time freedom and that financial freedom, and can do a lot more. And we enjoy life. We travel. We have 5 vacation homes and we travel to them every single year. And we live a life that I could never have imagined during all those hard years. And it paid off. I'm so thankful that we stuck with it.
I love that. And, they say the harder you work, the luckier you get. So definitely there's a testament to the ability to remain true to what it is that you were working for and to work through all of that adversity. And kudos to you for achieving everything that you've achieved so far. I can resonate with that because growing up, my parents had one field business first. Mm-hmm. And at that point in time, we were obviously concerned about our finances. It was around the same time as you were mentioning, 2007, 2008. And then seeing them kind of pick up and move forward and try and create something new. They built a second business. And you can tell that based off of the level of work that they had put into it, that the reason why is because they never, ever wanted to be in a position where they were worried about their finances and worried about losing a house, losing, everything. Right. And as you say, there has to be that emotional connection behind it. It can't just be driven by money or whatever it may be.
Absolutely. Yeah. Money is not a good why. And honestly, you can become a slave to the pursuit of money and to the pursuit of financial freedom, right? It's easy to do. If you're really focused on why and just trying to provide for your family and create enough income to have some time freedom to do the things that are important to you, it's worth taking it a little bit slower and enjoying life along the way, right? And really pursuing that purpose of time that the money just allows you to have more and more of once you continue to accumulate. So, again, we never started out to say we want great wealth. It was like, let's just create a way that I can have my time freedom to pour into my kids. And that's still my why today. At this point, I have a level of wealth that I never could have dreamed of and that I'm very grateful for. But more money doesn't motivate me anymore. It's what are the things that are going to allow me to make the biggest impact on my kids, on my investors, on my students, and have more time freedom. So being able to do more and create more wealth and more money, but with less and less of my own time is something that is really powerful. But it took a long time to get there.
Absolutely. All right, Anna. Well, we are coming towards the end of today's show, but before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question, which you have definitely answered up until this point. But what is your why? What is the underlying motivation behind everything is that you do?
Yeah, really, it's purpose, it's impact. First and foremost on my family. Creating a life that we enjoy each other. We enjoy being able to travel and spend time together, and then being a blessing to other people with what we've learned and what we've accomplished and what we have. And so today it's shifted a little from, obviously wanting to be home with my kids. Now I have kids that are in college and high school and younger. But it's really about enjoying time with them and now impacting other people. I have a huge why. I grew up again in Section 8 housing, and I've worked with inner city kids for a long time. And so, I'm working on products for young adults, for kids, for single moms, teaching them really strong financial literacy, how to create a life of purpose and a life of time freedom, and impacting my investors to allow them to do the same type of thing to live for a greater purpose. I'd say that's really my why today.
That's powerful. Especially, that's the thing. You get yourself into a position where you want to be, and all you need to do is extend your arm back down and help others achieve the same. So I love their purpose, and I love that you're doing that.
Thank you.
Second question we have here is, what book, apart from Rich Dad Poor Dad, has had the largest influence on your life?
I'd say 2. So the Bible for sure, lots of wisdom just for life, and happiness and joy and purpose. And then I'd say Multifamily Millions by Dave Lindahl. It's truly the only book that I read for a couple of years when I got started, but it gave me that insight to say, this is what's possible with multifamily apartment buildings and another way to grow wealth that you're not taught by your financial advisor.
That's a great recommendation. I don't think we've had that yet on our show. Number 3, what is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
I time block religiously. From the moment I wake up till the moment I go to bed, everything is on my calendar. I have appointments with myself to tell me the things that I need to do that I've committed to for life and business, right? So everything from it's time to wake up, it's time to work out, it's time to go to bed, it's time to get in the hot tub, it's time to have investor calls, it's time to do my asset management calls. So I have every single moment blocked on my calendar with what's important to me. And it keeps me from doing things like vegging out on the television or, just wasting time, because I've learned you can do 3 things with time, right? You can spend time, you can invest time, or you can waste time. I don't want to waste time. All my time is spent purposefully spending it on the things that are important, investing it in the times that are even more important. And I control my calendar to remind me what I say is most important.
I love that. And is this something that you do on a weekly basis or a daily basis? I guess, how often do you do this in order to make sure you set up that proper cadence?
I start at the beginning of the year, and really at the end of the year in December, I really take an assessment of what I want my goals to be in business, in life, in my investing. And I say, what's one thing and one thing only that I want to do for each area of my life that's important to me? And I make sure that first and foremost, I block that out on my calendar in a time of the week that I think is most conducive to doing that activity, right? So it might be that working out is 4 days a week in the morning and, Saturday afternoons or whatever that may be. But I time block the things that are important to me for that one big rock, and I put it on the calendar where I think it makes the most sense. Then I start to backfill with other things and other goals and responsibilities that I have. Like, for example, if you work full time, 8 to 5, you're at work, right? But what do you do on your lunch break? Block that off and do something, right? Make investor calls, look for deals, whatever it is that you need to do. But I do that at the end of the year based on the goals that I'm setting. Then if I have additional goals, I say, where can I fit that in my calendar? And if I can't, that's an intention for a different time. But I don't delete anything. And this is really important. Once you set your calendar for the year, I don't delete anything. If it gets moved, it has to be moved to a different time that week so that I'm still accomplishing all of those big things. And then obviously I have to shift because I have 4 kids that are in school and they've got sports and all kinds of things. So things will get shifted as I know their schedule. And I it's really important to me to travel. So 6 weeks of summer, I don't do a whole lot of things. I travel and I have fun and I do the things that are really important for my business to be maintained. But it forces me to get really good at business and strategy, because I have to say, if I want to do these things and I have limited time, I've got to figure out a way to still do them with limited time.
Wow, that's incredible. And being conscious of your time. And as you said, you're either going to spend it, you're going to invest it, or you're going to waste it. I love that. That's a huge impact. All right, fourth question we have here. What is the number one piece of advice you would give to anyone looking to achieve more control over their time?
Take control of your finances in whatever ways that you can. Learn to live below your means while you work to expand your means. If you can do that at all times, continue to reevaluate, cut expenses where you don't really need it, and then to take that extra money to invest it so that you can buy assets that pay for your liabilities, that pay for your expenses. Then as you continue to do that over and over and over again, you will grow income and you will grow wealth.
Powerful. Fifth and final question we have here, Anna. What is the best way for our listeners to get in contact with you?
Great. You can find me on social media at Anna Kelley, REIMom, or you can find me on my website at REIMom&quot.
Perfect. Well, Anna, tons of really valuable information today. I liked how you talked about your humble beginnings growing up in Section 8 housing, getting yourself in a position where you worked for Bank of America, eventually to AIG, and yet still having the time to fund your husband's business, your first initial assets, getting yourself out of debt, raising 4 children. The list goes on and on. I also liked how you talked about your transition into actively real estate investing and then scaling up from the 4 flats all the way until you get to the point where you first have that transaction with 73 units. And finally, I loved how you talked about what you're doing with your time now that you've been able to step back from your W-2 after 10 years of working in the trenches and investing much of your time and energy into that. I just want to thank you again for being a fantastic guest on our show, and I really look forward to remaining in touch.
Thank you so much. It's been my privilege.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.